Welcome to this explainer. Today, we're breaking down a massive transformation story playing out right now in India's power sector. We'll be looking at Genus Power's huge infrastructure upgrade and, quite frankly, their explosive FY26 financial results. We are going to examine exactly how a company evolves from a traditional hardware manufacturer into a long-term annuity-style service provider. And we'll look at the staggering numbers backing up that shift.
Okay, so here's our roadmap for today. We'll start with the smart metering boom, review those stellar FY26 financial results, unpack their massive order book, analyze their working capital health, and then finish up with the future outlook and guidance.
Right, let's kick things off with Section 1, the smart metering boom. You know, to truly grasp Genus Power's potential, we really have to look at the government's revamped distribution sector scheme, or RDSS. Think about it. How big is the mandate to modernize a power grid serving over 1 billion people? It's one thing to say smart meters are the future, but it's a whole different ballgame when you see the actual numbers required to make that happen.
The macro runway here is just staggering. Against an estimated national requirement of 32 crore smart meters, only 15.6 crore have even been tendered, and a mere 7 crore have actually been installed. So that leaves a massive void of around 25 crore meters still waiting to be deployed across the country. This isn't just a short-term trend, this is a multi-year growth runway that is honestly just getting started.
And Genus isn't just participating in this rollout, they are absolutely dominating it. We're talking about a 30+% market share as a meter manufacturer, and a 22 to 23% share as an advanced metering infrastructure service provider. Plus, they just crossed a huge psychological and operational milestone, over 1 crore RDSS installations. All of this is supported by a manufacturing capacity that now exceeds 18 million meters a year.
Let's move right along to Section 2 and look at their stellar FY26 financial results. Having a massive market is great, sure, but execution is what actually drives the numbers. And the top-line surge here is incredible. Standalone revenue grew by 94% year-over-year. This kind of scale-up was driven by sustained acceleration in project execution, a really rapid ramp-up across multiple live projects, and strong progress in integrating and commissioning these units.
But here's the absolutely crucial point. They aren't just growing revenue. Their operating leverage is kicking in beautifully. Their disciplined execution pushed EBITDA growth to an incredible 104%. When your profits actually grow faster than your skyrocketing revenues, you know those scale efficiencies are really doing their job. And that led to an EBITDA margin that improved to over 20% for the year.
Net profit followed right along, basically doubling year over year to hit 106% growth. This showcases phenomenal bottom-line execution. They're managing a totally new scale of operations while keeping a super tight lid on costs. Now, grounding those percentages in absolute rupee values really reveals the true weight of this scale-up. For FY26, standalone revenue stood at an impressive 4,738 crore rupees. EBITDA hit 960 crore rupees, and profit after tax reached 605 crore rupees. These are serious heavyweight numbers that definitely mark FY26 as a landmark year for the company.
Okay, on to Section 3, the massive order book.
This brings us to the real engine fueling all this growth, the AMISP model, or Advanced Metering Infrastructure Service Provider. This defines exactly how Genus is shifting its core identity. They aren't just shipping boxes of hardware anymore. They are delivering end-to-end solutions. That means supplying the meters, installing them, and deploying all the supporting infrastructure, like cloud integration and network operations. And they do this under 8 to 9-year concession periods. Why does that matter? Well, because it locks in sustainable annuity-type recurring revenue for almost a decade.
That shift is backed by a massive 25,173 crore rupee order book, which highlights the tremendous long-term visibility they've locked in. That is an enormous backlog, coming primarily from their AMISP projects. When you have this much revenue secured over the next 8 to 9 years, it just fundamentally changes how you plan, invest, and scale your business.
And here is the catalyst for unlocking that order book. All 24 of their AMISP projects, covering about 3.61 crore awarded meters, have officially achieved operational go-live. As these projects enter their operation phases, the billing visibility and recurring cash flows become so much stronger. It's the major turning point where deployment actually starts transforming into steady cash generation.
Let's dive into Section 4, Managing Working Capital Health.
So you might be wondering, how on earth do you manage debt and working capital when your revenue grows by 2,300 crores in a single year? Well, you become hyper-efficient. Total working capital days dramatically stepped down from 343 days in March 2025 to 274 days in March 2026. And what's even more encouraging is that management actually expects a further drop of 50 to 75 days in the current year. They are funding massive growth but requiring proportionally less working capital to do it.
They also managed to aggressively cut debtor days from 187 days down to just 89 days. Inventory days dropped from 127 to 104 days. Now, yes, they have seen an increase in short-term net debt, reaching 1,573 crores, to fund this rapid rollout. But as more projects hit operational phases and those annuity revenues kick in, that cash flow generation is expected to normalize and improve significantly over the coming quarters.
Finally, let's jump into Section 5, Future Outlook and Guidance.
So we've seen the past year's incredible success, but what does the roadmap actually look like for FY27 and beyond? Management is projecting yet another massive scale-up. They're guiding for revenue in the range of 6,000 to 6,500 crore rupees for FY27. Now, while revenue is surging, they are being pretty prudent by projecting a slightly lower EBITDA margin of around 18%. Why? Because they're factoring in elevated raw material costs, driven by global events impacting petroleum prices and chip supplies. Even so, they're anticipating around 9 crore new smart meter tenders to hit the market this year. So the pipeline remains incredibly rich.
And Genus isn't stopping at electricity. Beyond the power grid, they are strategically targeting adjacent growth opportunities. Just in India alone, the smart gas metering opportunity is estimated to be worth between 35,000 and 36,000 crore rupees over the next 3 to 4 years. Add in the massive global push for smart water meters and international exports, and you can really see how they are positioning themselves as a comprehensive utility digitization company, not just an electricity meter manufacturer.
I want to leave you with a provocative thought to consider. We know that out of the roughly 32 crore smart meters required in India, only 7 crore have actually been installed. Genus has locked in a massive 25,000 crore plus order book with 8 to 9 year concessions. So as they keep capturing this market, converting those one-time sales into long-term AMISP service contracts, just how massive could this compounding annuity engine become by the end of the decade? It is an absolutely fascinating space to watch. Thanks for joining me on this explainer, and keep learning.